Have you heard that SoFi just inked a jaw-dropping $2 billion deal? If you're wondering how this is going to impact your investments, well, you're in for a treat. Felix here, and we're going to dive deep into SoFi's latest power move that's got the market buzzing. This isn't just a ordinary deal. This is a big deal. And yeah, companies make partnerships all the time, but trust me, this $2 billion agreement with Fortress Investment Group is anything but ordinary. Strategic masterstroke might come to mind, and it's going to supercharge SoFi's growth and, yes, profitability. So let's unpack that deal. But before we do, it's important to understand where we're coming from. So let's run through the recent developments here and have a look at the stock chart, because the breakout's glorious. You see that here? We went from, $8 and a bit, $9, all the way up to 10, and we're about a cent below it as I'm recording this. And that breakout, my friend, was textbook. And it was predictable. And you can predict it. You can spot it. You can actually spot any major breakout of any stock if you just know what to look for. You know what to look for? Well, guess what? I've recorded a 30-minute masterclass for you so you can learn it for free. The 4 steps that need to be in place to spot the breakout before it happens. And you can watch that at felixprehn.org/get free. So check it out. And if you're wondering why I put those out, well, once you watch the video, you understand a little bit better. But ultimately, I want to make 1 million people financially free. That's the little mission here of our channel. It's quite a big mission, and we want to reach a heck of a lot of people to do that and help them get onto the path to financial freedom, because life's a heck of a lot more fun once you are no longer tied to a desk. Okay, SoFi. First up, we've had a lot of product diversification in the last couple of weeks. They are expanding their offering. We've got 2 new credit cards out. Why do you care about credit cards? Well, they spread risk. They diversify the product lineup, and we like that because it makes the business more resilient. And they fit very, very nicely into SoFi's existing ecosystem. And then we have institutional ownership skyrocketing faster than Winston chasing a squirrel up a tree. 20 to 30 million shares were gobbled up by institutional investors in the last month. And that is a vote of confidence. Now we're aiming to get to 60% institutional ownership. That's sort of where, that's the average for peers basically out there. You want to be part of that gang, and that could happen very soon at this rate. So what does it mean for you and me? Well, combine the institutional love with the positive developments here, and the one we're going to pick apart here. Short term, I'm looking at $10 to $13. Medium term, looking at about $15 to $18. And long term, I'm looking at about $20 to $28. And there is a good chance we might get to the 35 or even 45, because that is where Anthony Noto gets properly remunerated. A lot of his options are hinging on that. Okay, let's break down the deal. In a nutshell, SoFi has inked a $2 billion loan platform business agreement for personal loans with funds managed by Fortress. That's a bit of a mouthful. So let me break it down in a bit more of a simpler way. Essentially, SoFi will be referring pre-qualified borrowers to loan origination partners and originating loans on behalf of third parties. So they're kind of being the matchmaker in the world of personal loans, and Fortress is providing the venue for that dating service. So let's put it into perspective and compare it with some of SoFi's previous agreements, like the one with BlackRock. That deal was worth $250 million, which was, still a lot of money. But the Fortress deal, well, it's 8 times larger. It's like, Chihuahua versus Great Dane. Both cute dogs, but, one's a little larger. So the sheer size of the deal speaks volumes about Fortress's confidence in SoFi's loan origination and their underwriting capabilities. They're basically saying, we trust you with $2 billion of our money. And that's a pretty big vote of confidence. And as for the market, well, investors were doing the happy dance as the news came out. Stock price jumped quite significantly, as we just saw on the chart here. But it's more than just a big number. You see, it's a crucial part of SoFi's evolving strategy. And that's what I really want to unpack, because I think it's so important to understand that. CEO Noto has been very clear about SoFi's game plan. First, diversification. SoFi is moving towards less capital-intensive revenue sources. They're focusing on fee-based income, which typically investors value higher than interest income. And the Fortress deal allows SoFi to serve more members and expand their financial offerings. Now let's talk numbers. Now we don't have the exact details, but we can make some very educated guesses about the financial impact of this. First up, SoFi could be looking at an upfront revenue of about 40 to 60 million just for originating these loans. That's a very, very nice signing on bonus, but it doesn't stop there. They could rake in 10 to 20 million annually just from servicing and performance fees. And then there's a cherry on top. SoFi's high-tech platform means they can process these loans with very minimal cost. We're talking maybe 15% of revenue going to expenses, and that's a very high margin business as an 85%. So potentially we're looking at a profit of about 42 to 82 million from just this deal alone. And that could really boost SoFi's earnings per share by 4 to 8 cents, which doesn't sound like a lot, but it's a big deal. What about the risk? The risk of all these loans going belly up? Well, the brilliant part is that SoFi is transferring most of the credit risk to Fortress. So they're getting the reward without taking on all the risk, which is rather clever. Plus, SoFi is known for attracting high quality borrowers. They're called Henrys, high earners, not rich yet, but they will be. And they typically default at very, very low rates, and they also borrow more. So all in all, the deal could be a game changer for SoFi. It's not just about the immediate profits, it's about setting up SoFi for long-term growth and success. And that is what small investing is all about. So if the deal is so good, why the heck is Fortress agreeing to it? Well, let's look at it from their perspective. Well, Fortress manage about 45 billion in assets. So why are they keen on partnering with SoFi? Well, they spotted a sort of shiny new toy in the playground and they want it. They obviously are impressed by SoFi's ability to innovate and cook up valuable credit solutions. It allows Fortress to diversify their portfolio into consumer loans, which could be a nice diversification for their existing investments. But the really exciting part is that this 2 billion deal might just be the appetizer. There is a potential for this partnership to grow even bigger in the future. And importantly, the stock broke through the $10 price range on the news, and in the stock market, there's certain price levels that are psychologically very important, and $10 is definitely one of those. So it tells us that the market and institutions are looking at, wow. If you look at the volume on the chart here, and I show it to you, see these little lines down there? They are big. You don't get to that sort of volume unless you get some institutional buying, and that's a good thing. And for the following 2 days, we're holding on to the $10 level here, approximately. A few cents never really matter. So to really understand what's going on here, you need to understand that SoFi is shifting from being a balance sheet lender, lending their own money, to more of a loan origination platform. So they're moving from being the owner of a restaurant to being the matchmaker connecting hungry diners with great chefs. Where do you think the margin is better? Is it the guy who's paying the rent on the restaurant and employs everybody? Or is it the smart little app that just sends people and collects a fee? Of course, it is the latter. So juicy benefits are here. This fee-based revenue, well, fee-based revenue is valued higher than traditional lending revenue, simply because of the high margins. And I mean, SoFi already has very healthy gross profit margins, 82%. It's very, very impressive for a bank. But they've been very cautious about cash burn. The Fortress deal, well, it's sort of like finding a way to keep the engine running without burning through your own fuel. You're using somebody else's. So if SoFi can keep growing its loan business without tying up its own capital, which is really the perfect solution. So what's the risk here? Well, if the market really goes belly up and everybody defaults on their loans, then that isn't good for the whole space. Now, SoFi is managing to offload a lot of the risk to other parties, which is a smart move. But they still hold some risk. That's definitely the risk. Although I am looking a little bit more positively at this because I think US government will tend to bail out everything and everybody. So the big recession default risk seems to be relatively modest at the moment. Plus, now that BlackRock's done 250 million, Fortress has done 2 billion. Maybe BlackRock will come back. Maybe they'll do 2 billion too, or 4 billion, or 6 billion. So the potential for more partnerships and bigger deals here is, I think, what's getting the market excited. And this kind of deal actually leads to a higher PE multiples for the stock because We know they're using other people's money. They're collecting fee revenue rather than lending out their own money. So less risk, higher margins, and the market appreciates that. So therefore, we should actually see the whole valuation shift up for SoFi. So how do you trade it, you might ask? Well, if I look in tradevision.io, which I've got open here, I did explain that this is a classic breakout. And then we see a few other things here on the chart. See these green lines here? They are your resistance. So $10 is the big resistance, and then it moves up to $10.50. If I go into next week, the resistance actually moves to $11. And it's always the biggest lines that matter the most, the biggest green lines here. So I've not seen that in years on SoFi, that we have resistance shift up this much. And that's a sign that people are actually moving their positions up, and that is confidence that the stock is going to stay at these levels. So what are we doing? Well, we entered a little sooner than this with using some leap options. But yeah, I think breakouts are good. Now, almost always do you get a retracement. It's very, very rare that you go straight up in that sort of line. Most of the time you come back down to where you were, and then you actually take off again. So usually we get a second chance to enter again. And again, if you understand how to spot that second chance and how to spot the 4 rules that apply to actually be a proper breakout, then you know what to do. And you can check out my masterclass on that at felixprehn.org/get-free while it's still there. And if you're wondering why I might take it down, well, watch the video and you'll understand. So that's definitely one thing I do. You can also get yourself a free trial to TradeVision if you like. We have a trend indicator in here as well, which has made 40% money in the since beginning of 2022 on SoFi. Buy and hold on SoFi, you'd be down 55%. So you can see why I'm smiling, right? So check that out. You can check it out for a week. If you don't like it, then you cancel it. Now, no indicator is 100% accurate. And if you just use an indicator and you have no risk management, you will lose money. So watch the masterclass. Knowledge is key. Knowledge is everything. You need to understand what works, so you also have the confidence to act on it. And if you got some value out of this video, share it with a friend or a golden retriever, or somebody who might care. And I will thank you for watching. All the best.
If I don't buy SoFi stock now, am I missing out on the next big fintech revolution?